European crossover webinar, and I think we've got the correct webinar started up finally. Let's take a look at something real quick. I hope that everybody can hear me. Okay, let's see. Look, I think we're in the right the right webinar. Let me just double check something real quick. Okay, it looks like everything's correct now. I started up the new webinar, but we're still using the face webinar until then. Let's go on and pull up as far as the economic news that we have right now. We did have German retail sales, which actually came in just a hair bit stronger. Also, Spanish PMI. As we come in, we do have Eurozone market final here now. Let's see, we got a little bit discombobulated as I was starting the new European crossover webinar link, but we're still using the face webinar, so I had to jump out of the other webinar. So apologies on that. We do have ISM manufacturing PMI this morning, as well as construction spending. ISM manufacturing is not going to be till 10 a.m. Eastern. We do also have Canadian PMI, and we have a pretty good move down here in the Canadian dollar. Let's go on and get into the news. Got a little bit discombobulated with the new webinar link, so be one moment. Obviously got some big news here in the Canadian dollar, and that does have us pushing lower. And what I'm looking for, and I put that in the analysis, for a potential move down here, that 27.53, and I'll show you on the daily what we're looking at. Right down here, 27.58, right here, this level here. Looking right there now, the market, we could look for potentially a 50% correction from down here, 2062 up here to 33.84. But this is what I'm looking for the market to go to, this 27.58. If you pull this line back, obviously got some big NAFTA news that came in, but you see right here, all the way coming across, to me, it looks like that's where this market wants to go to, which is going to be right there, 27.58, 27.60-ish, but a potential stretch all the way down here. Euro did go in and retest, and we did mention the analysis to go and retest at 1580. There's a potential we could even come down here, but they've successfully retested that. This is the same area we talked about, if you remember, on Friday, as for a key area to go and hold. Actually, at the time, I put my support basically right there at 1578. Let's see. I don't even have the bias chart up yet now. But we've come off of that level. And there's our support from Friday, which we were talking about this area being key, and we just put it just below. I think we'd mentioned 1582, so we just put just a hair below that. And I think the low was, what was it, in the upper 60s or something like that. But and then our resistance was 1625, and I think the high on Friday was like, what was it, 1630 or something like that. This also, the reason I also went with this, because this was the 1624 was the 23% back on this area. So at the time, the market topped out at 1630, and then we had our support at 1578, and the market bottomed at what, 1570. Oh, okay. Let's go on and move on to the news. just one moment. I had started up the webinar early, and well, actually not early, but I had gone with the a different link, so trying to get my iPad going so I can make sure that everything's running okay. So anyway, let's go on and move on now here, and we'll get into the news, and then we'll get into the coverage and the webinar. Says the Australian New Zealand dollars edge up against a weaker greenback. The Australian New Zealand dollars eked out gains against the greenback on Monday despite low trading volumes due to the start of holiday in Australia. Some of the previous week's strengths in the dollar had worn off, and looming deadline in Canadian-U.S. talks or we're working the North American free trade agreement. We're waiting on the greenback. Well, we know that the news came out that they were going to go with that agreement, and Canada would be part of that. The Aussie had found support around 72, but analysts warned it would remain vulnerable, giving ongoing global jitters, could dampen commodity currencies, and we are seeing gold slide back in. We had actually once again did the analysis. We did not make up that run after breaking 1197. In the analysis, basic technical analysis, where I put my analysis, we talked about 1197 now being resistance, and this is where the market basically ran out of gas, and we've come back and trickled back down. But it says the Aussie risks remain to the downside, given the confluence of FOMC, U.S. review of China tariffs, and Euro-Italy budget risks. Across the Tasman Sea, the New Zealand dollar drifted higher, but lingered below the one-month high of 66.96. Tuesday will bring yet another economic confidence measure. The New Zealand Institute of Economic Research will be out. The results could move the Kiwi higher if they confirm a separate ANZ Bank survey's indication last week that business confidence was lifting off 10-year lows. And let's go on and move on to sterling. Rises despite fears of the Troy Brexit conflict. The pound rose after Britain's finance minister said on Monday the European Union was willing to do a Brexit deal, but investors said uncertainties around the ruling Conservative Party conference could quickly reverse the currency's fortune. 6 months before Britain is due to leave the EU, traders are focused on events like the conference and an upcoming EU summit for signs on whether the UK will clinch a deal. Deep divisions within the party could turn this conference into a disaster for May, which could easily have negative effects for sterling, said Tu La Wen, FX strategist at Commerzbank. The government might end up without any Brexit plan whatsoever, whichever way one looks at it. The next few days will be uncomfortable for sterling. Finance Minister Philip Hammond told BBC on Monday the mood is undoubtedly that people want to do a deal with the UK. The pound is up 2/10 versus dollar to 30.50. We could see any dips in the pound and around the Tory conference as an opportunity to buy the currency with a deal on the Irish border backstop to see a sharp repricing of 136 to 138, says currency strategist Viraj Patel. Hammond said on Monday that doubts about Britain's future have already hit the economy, in the next few weeks would be crucial in securing an exit agreement. Many businesses are sitting on their hands, frankly waiting to see what the outcome of this negotiation is before confirming their investment plans. Last week, Britain's opposition Labour Party sought to woo business bosses, although the proposed was a raft of radical economic policy, saying the Conservatives had given them the opportunity to pitch an alternative leftist strategy. And the Canadian dollar jumps after trade deal, euro struggles. And as we said, we did see this market really pare back. It was already sliding on Friday quite a bit. And I'm looking for a move potentially right down here, this 27.53. We'll pull this back. Right there, you can see all the touches coming across here, right there. 27.53, and not that far away, as I mentioned. When you look at the daily, to 27.26, being the 50% of this entire move of 20.62 to 33.84. Canadian dollar jumps after the trade deal and the euro struggles. The Canadian dollar rallied 0.5% against the dollar on Monday as investors rushed to buy riskier assets after the United States and Canada agreed to update the North American Free Trade Agreement. Trade tension has dominated currency markets since April, boosting the dollar and pushing down currencies of trade-dependent countries from South Korea to Mexico. The latest news prompted traders to cover some of their extreme short bets. Sources said direct knowledge of talks confirmed the two countries' recent agreement, which involved offering more daily access to U.S. farmers and Canada agreeing to a side letter agreement effectively capping automobile exports to the United States. Appetite for risk-taking is a bit firmer in the backdrop of the trade deal, though the spotlight will be firmly on U.S. jobs data on Friday, which will indicate whether wage growth is picked up, said Manuel Oliveri. Apart from the U.S. jobs on Friday, PMI data will also be closely watched. U.S. stock index futures gained while Japanese stock markets climbed 0.5%, indicating risk appetite wasn't confined to currency markets. Sentiment has been more subdued in the European session. Italian bond yields surged in opening trading on a report the European Commission was set to reject Italy's budget plans in November and open up a procedure against the country's public accounts. Speaking of which, Italy's bond yields extend last week's rise on budget concerns. Italy's bond yields rose sharply on Monday, extending last week's moves, as Moody's report suggests that Italy's budget proposal was set to be rejected by the European Commission. Italian government bond yields and banking stocks were hard hit on Friday after Italy's ruling parties, the anti-establishment Five-Star Movement and right-wing League, proposed a budget for 2019 with a budget deficit target of 2.4% of gross domestic product. It's quite clear that the European Commission will not like the budget proposal, says Commerzbank rate strategist Michael Lester. Brussels will give its opinion, which we think won't be positive, and the rating agencies will opt for a similar stance. A downgrade is our base case. TRIA moved to temper concerns that Italy's enormous debt pile, 131% of GDP, would continue to grow, saying on Sunday investments would fuel economic growth over the next 2 years and put debt on a downward path. Elsewhere, Eurozone bond yields were 1 to 2 basis points higher as the last gas deal between the U.S. and Canada on Sunday to salvage the NAFTA pushed investors to riskier assets. And weak German data points to growth slowdown in third quarter. German retail sales fell unexpectedly for the second month in a row in August, and factories shifted into lower gears in September. Household spending has become a key growth driver in Germany, where consumers benefit from a record high. The economic environment for consumption is still excellent, but many traders are worried about U.S. tariff disputes and many conflicts with the federal government. Chancellor Angela Merkel, ruling coalition, has quarreled over asylum seekers, immigration, and right-wing extremism over the past month, with brought the government close to collapse. And lastly, gold prices slip as the dollar firms and Fed rate hike view. Gold prices remain dependent on the dollar. In this juncture, the U.S. economy has been rosy and better than expected. Efforts by the Trump administration to reduce the trade deficit from an economic point of view has been friendly for the greenback as well. And we are seeing gold, pare back. We've done the analysis on the website for gold, and we had pointed out here that this break of 1197 was key, and this is exactly what we'd be looking. This would now be our resistance, and we're starting to see this market just roll back again. We still have a downside target of 1179 with a stretch down here around 1174, and we'll move on to the buyers chart. So let's go and take a look at the euro. And I posted this in the Asian analysis, so some people, I think they weren't even aware where I was posting the analysis. They asked me in the Asian session I was yesterday. So I just had it here on the basic technical. The Euro 2-hour likely to retest support at the 1580 level. 1557 is a 50% of 1302 with a stretch intraday at 1536. Pair needs a 2-hour close above 1658 to negate the downward momentum. Same thing here. So this is where I post all my analysis here. Same thing here with the cable. We did cable, gold, the dollar index, the Japanese yen. Same thing on the Japanese yen. We're actually looking for, we have a daily up there at 1423, but here was the analysis here for the gold market. Key support of 1197 is now resistance. The downside target of 1179 remains with the stretch to 1174. The shiny metal needs a 2-hour close above 1208 to stop the bleeding. Gold would require a 2-hour close above 1219 to turn the mode bullish. So that 1197, as I mentioned, is now resistance. And as we move back in here, and then I've got the chart posted with each analysis on the Asian update. So as I said, we're likely to retest support at the 1580 area. That's actually where we went to. Let's move this out of the way. So we revisited this 1580. This is the area that we talked about on Friday, and why we had our support actually at the time at 1578. That area did go on hold, and you can see here we've come up to the 1619 level where we've kind of eased back a bit. One of the things I mentioned, I was meeting with Mike this weekend, and that's Beans in the chat room. We were talking about the euro, and one of the reasons I had also looked for support on Friday at 1578. Well, not only is it key, but we'd fallen so far off. I wasn't sure how much further we can push down. Things are just, mixed here with the euro, because I think we've done so much technical damage on the way down here that it's hard to get people to want to go on and want to be long this market. As I mentioned here, we take a 2-hour close above 1658. Just to get things start to moving back up again. So I think any moves here, if someone was long, maybe they got long from at 1658 or here, I think they would use opportunities probably to go on and just even up. And I think the market is going to be a bit of a doubt, especially with the euro, with the Italy situation working as an overhang. This seems almost too enticing. I think right now the only thing we can do is just look at the levels. So at this point, the only thing is, if we break here, this 1580-ish area here, and this is actually 82, this level, it's hard to think that they would just stop. I mean, here's the stretch move that I was talking about, the 1536. I think this may hang around here maybe for a couple of days. After you've, when the market is falling hard like this, market has to kind of find its own footing, get a feel on how things are going now. Well, the big news at the end of the week is going to be non-farm payroll. I don't really see the euro turn around and taking off this way. If anything, it's probably likely to slide further back. We are holding at this 1611, but I think any moves back up in here, I think they'll be looking as opportunities to go in and sell into this. When we look at a fib, one of the reasons I had actually played the euro long early in the session on Friday and then exited out a little bit too early. And I put in the room that we're looking for resistance at 1606 and 1623, or 1623. You can see this is where it actually stepped in and shorted this. I actually thought, I don't know why I had 1624. That's why I think it was 1624 and I shorted was 1622, I think it was. But this is where the market ended up running out of gas, pairing back. But I was out before the close on Friday. But the point is I'm looking at the 38%, and that won't come in until 1663. I don't see, unless they get some good news or something, I don't see where there's the impetus to move this a whole lot higher. And I think that anybody that's stuck, it will use any opportunity to go on and exit. So let's go and move this out of the way. This is going to be the resistance right here, 1648. We'll pull this back, see a little bit clearer, right there. That'll be the resistance, 1648. I don't even give it to 1658. It would require 2-hour close above 1658 just to finally get rid of this downside momentum. As far as support, we're going to go with 1552 right there. And 1557 is the 50% of the entire move here of 1302 to 1850, 15, I should say. We'll go with 1552. We do have a stretch target down here, 1536. But I think that any dips down there, depending on what part of the week we're doing that in, if we're going in towards the non-farm payroll towards the end of the week, then we could definitely go on and stretch down here at 36 if the market gets bearish. Right now in this 2 hour, we got a little mini, like a mini little doji. It's not even very long at all. Let's pull this back. Generally, you get something, and this isn't very long at all, but you'll see the market kind of pare back. You can almost refer to this as a spinning top, but probably more likely for the market to go on and test back, especially if we can't find any buyers up in here. So we're going to go 1552. I think we're just in a mixed area right now with the euro. I think you've knocked quite a few people out of the box, and I don't think anyone's believing this to go higher. It is very oversold. That's the only thing. So I think we could hang around here. We might even pop this stop here and then find ourselves running out of gas around 1640 and then eventually start working a little bit lower. So I think it's a little bit of a tough market to trade right now, but we'll put this down to 1553. And let's go and move into the cable. Okay, our analysis on the cable during the Asian update was after a breakdown from the pivot level of 30.56, and here's that breakdown right here. Market to target 29.56, which is confluencing with 29.59, which is 161%. Upside resistance, we're putting it 31.03. A little bit of mixed back in here. They got that confidence coming up. The market's trading, in a sense, a little bit quiet for the most part, but we did get this little hammer bottom. They've tested. They haven't gone beyond 50%. Generally, when you get a hammer bottom like this, you don't want it to go beyond 50% of this range. So they're holding above that, but I still think there's an opportunity for this market to get down here. I think that's your risk here, this 29.56. This happens to be also 161% of this range. See there? So we have a bit of a confluence right there. So if they do slide, that's a target like 29.57. Got a level there, and also a confluence with the 161% of this range here. And market still remains bullish. Upside, as we said, is going to be 3103. I don't see any reason to change that. I mean, from the Asian update. So it's going to be 3103. And let's go move into the Aussie. This has continued to stay relatively weak. I'll take a look at the 2-hour chart. Unless this thing completely breaks down, there's always a possibility, but on a short-term basis, you can see right here, this level coming across this top. Looks like some pretty good volume coming in right there, 65.90. The market seems to be dripping lower, drip. So it may just go and take one quick dip and then pop back up. This is where, the 61%, but we did bounce up to 50. So generally, if you defend it, which, I mean, we bounced, but we came back down. There's some additional one, but for right now, market's trading relatively quiet. The Aussie could be actually in even worse shape for the most part. Let's go with 65.90 today for support. And that's actually, I apologize, I was talking about the Kiwi. And resistance, it's going to be right there, 66.44. Not that far away, but once again, any bounces, this is where we would have the stops. Things was going in, changing. You get a much further run than if we can go in and get beyond that 66.44. And that's where we had it before. Let's go and flip into the Aussie now. Well, here's that key level here, 71.86, and this is what we'd be looking at for support. 71.86 right there. Resistance is going to be just a hair above the 72.55. You can see where the market has a body here on this close, which is right there. Call it 72.61. So we got some room up there for the market to go and move. You think about as bad as the whole tariff situation is, at least over the very, very short haul, the Aussie dollar isn't doing too bad. My point being, it could be a whole lot worse. But resistance would come in at 72.61. Obviously, the mode still remains bearish. We'll just move that 1 pip higher. And let's go move into the dollar CAD. Here's our resistance here on the dollar CAD, where I think that the market is going to go on and try and make a move to this 27.58. And when we look at that, you can see the level coming across. You see all the way back here. So that's where I'm coming up with 27.58. And you can see some good support there. So I think there's a potential for this market to use that as a target to go to. Certainly things have turned very bearish in a very short order. Well, if you remember, we had our resistance at 30.93, and we had 30.96 was, I believe, the 61% of the move back, and we saw a potential stretch, I think it was to 31.20 or 31.23, but they actually ran out of gas just about 10 or 9 pips away from that 30.93, and from there we have really come under a lot of pressure. I think some news must have leaked out that they were potentially going to make agreement, which came in to fruition last night, because that thing really came apart on Friday. But I think that, once again, I think the market would like to get down here, this 27.58 level, before all said and done. So that's going to actually be, as oversold as this, that's actually going to be our target, 27.58. Our target will look for support. And you can see this 27.53 coming across here on the 2-hour chart. That's actually even more clear than the daily. You can see all the touches and the battle zone here. Resistance looks like that'd be 28.42. Pull that a little bit closer. Why don't you move that a little bit higher right there? 28.52. 28.52 in case we get a quick little short covering rally. It's 28.52 that'd be key on the upside for the dollar CAD. But we do like this area here for the market as a magnet to track to. And let's go move into the dollar Swiss. We already had a heck of a run here in the Swissy. You know, we got past this 98.04, and that was no small feat, which is even beyond the 50%, which was 98.06, and we still made a continued move higher. We've gotten as high as 98.47. Key area here is 98.57. We're looking at the daily. Let's go move into the 2 hour. Well, that's where we stopped at, which is going to be our resistance. Right there, you can see that body closed 98.43, and they got up as high as 98.47. Not that far from this key area 57. We'll go with this 98.43. We're still not that far away. I mean, you think about it. Here we are, 98.31. They can still make a run for this key area. 98.57 with just a little bit, 61. Hey, well, we'll go with this 98.57 as being key. 98.57 is going to be our resistance. It's had a heck of a run already. Support is just going to be below this key 98.04. Let's call it right there, 97.91, or actually 97.92. No, it's not certainly not bullish by any stretch of the imagination, but if we're able to hold in this area here, certainly we're going to be able to change this to a range, but it would have to hold here for at least for another day or two. Now let's go move into the dollar yen, and boy, what a run this thing has had. One in the, I was looking at it and I'm like, now it's finally playing catch up to what the move that we've seen here in the bond market. One of the complaints we had is that the dollar yen hasn't reflected the move in the bond market and seemed to be diverging from that inverse relationship that it has. Now, here's that key level that we talked about, goes all the way back to 2009, and we got above it and looked like we're holding, and here we are starting to slide back. Well, that's just giving a little bit of ammo for the dollar yen. And I looked at it. I wasn't a believer of this thing, but I tell you what, it's continued to move higher. Here, I remember taking a short at 12.23, and then got stopped at 12.52. And that was going to be on a 2-hour close. We actually came down, it defended it, then it came back up, and I was able to get out. And I didn't want to touch it after that because it just didn't, I didn't believe it, but it didn't make much sense. But here it is from a technical standpoint. It continues to move higher. Now, obviously, we ran into some 2-hour resistance at 1408, which I didn't even see that, but I was looking at the daily, but we'd have to add some more data. But I had that 1408 level. But there's been other levels here that looked like it was going to hold it. What I did was I looked at it on the daily, and this one I'm looking at here is 1424. And 1543 would be the 78% if it made that run. But to me, it's right here, this 1424. And there's still a possibility we can make that move up there. having a hard time believing the dollar yen, but you can't doubt the where it is. Remember we talked about it when it defended that 1166, and it continues to motor higher. But you can see here this 1424. And actually what came in, because you would look at the bodies and it would be just a little bit hair lower. But when I pull this back, right there, you can see these little touches come across. So at least for now, that's a short-term target, 1424, which this 1543 is even bigger. To me, like I said, I don't get it what the dollar yen is doing here, but the point is it is here, and now it's playing catch up to the 30-year bonds, and the 30-year bonds are still under pressure. I think we're overdone here, but they still remain under pressure for right now. So our resistance is going to be 1424. Support would come in right there at 1337. So let's go move into the cash dollar index. So one of the things that we talked about on Thursday was in cases, what we'd be looking at, and I thought that the dollar index would eventually work lower, but we said that, hey, if we get a 2-hour close above 94.68, that pointed the door for 95.20, and certainly it went to 95.20, even went beyond 95.20, and this is where the market stalled here on Friday. This is actually, on Friday, this was our resistance on the cash dollar index, which is 95.32. The high was actually 95.37, and we had our support at 94.96, and they found support at 95. Now, one of the things that I was looking at also was the daily. And since we were able to close above 94.97, here's 94.97, we close above that, it really opens the door for the test of this 95.65. I don't know that it's going to get there, but the point is that it's open. This move above 94.97 has opened that test for 95.65. Whether it gets there or not, I don't know, but I think it's tricky. The same, just like the situation is for the euro. The euro, we were just seeing it just a little while ago, up there at the 16.19, and I think that this market is still open to rolling back and having to test down here. So when we take a look at the dollar index, we get past this 95.32, certainly it's going to hit some stops. And I'm saying get past 95.32 on a 2-hour close. You know how important 95.32 has been. And that's what I'm saying is you're looking at 95.68. Whether we get there or not, but that would be the area. So that's actually going to be our resistance. And actually it's a daily close. You got 95.68 on the 2-hour. I'll go here with this daily being 95.65 as our resistance. Well, let's go back into it to the 2-hour. We'll go with this 68, 95.68. And all I'm doing is just respecting the technicals right now. Because we got that 2-hour close, remember, above 94.68. That opened the door for us to go higher. And then with that daily close above 94.97, that allows this market to make the next challenge. Support. It's going to be right there. We're going to call it 94.94. Just 2 ticks below Friday's support. But as I mentioned, this has been a huge area. We've used this as a key level for, God, about a week and a half or so, maybe even almost 2 weeks at 95.32, and that's held like a champ. Once again, if it goes on a 2-hour close, we're certainly going to go and try and make that move higher. Let's now go in and take a look here with gold. We're still pointing for lowering gold. Let's go into the daily. This was just a huge break, and to me, it just feels like the gold market is just kind of stumbling around right now. With that, you're basically sitting in mud. You get a car stuck in the mud, and you just you put it in drive, and your tires are just spinning. You go, okay, well, I can't go anywhere in drive. Let me go in reverse. You put it in reverse, and your tires are still spinning. That's how I feel the gold is now, because we really knocked a lot of people out of the box. I know that I was looking, it was set up for a bullish mode. And remember, we had said on a little bit longer term basis, we liked the area down to 1204. That area held as long as it didn't go, you know, a 2-hour close. Even though we were looking at a daily at the time, a 2-hour close below 1197, and 2-hour close below 1197 did come to fruition, you know, on Friday. And this really opened the door for this market to go a whole heck of a lot lower, and lower it did go. Things started falling apart in the Asian session and kept on going. So we found some support right around this 1184. I saw this on the daily. I mentioned on Friday ago, I know there's some support there. I couldn't remember where it was. It was actually here on the daily. You can see these closes right there. That's where they found some support. But one of the things we did in our analysis, and we opened up here pretty close to where we'd close on Friday. There we go. And on the analysis, we pointed out that 1197, which had been support for the market, was now going to be resistance. And we opened up pretty close to that on the Sunday session. And since then, we've just rolled lower and lower and lower. And so our downside target remains the same, which is 1179, with a potential stretch down here to 1174, 73-ish, right there. Obviously, if the dollar makes its break higher, and it's certainly trying to make that push, that's going to weigh on gold and probably open. I want to say open the floodgates, because I think the floodgates came here when we broke 1197 and went with that 2-hour closing. You saw just a heck of a lot of selling. But it does open the door for potential move down here to 1179 with a stretch, as I said, down here to 1174. So our resistance to the Asian session, which is 1197, I think we have to adjust that now on a shorter term basis. So resistance now is going to come in at 1194. See that here. We had 91, and they really broke them up higher on Friday and made that run back up towards 97. I think we ran out of gas around 1196. Well, our downside target is 1179. The market was a whole heck of a lot weaker on Friday before it recovered. We're going to have to leave this 1179. That's a heck of a long ways away from this. If you're looking on a very short-term basis, resist support is going to come in at 1185. But you have to be careful on this one, because if the dollar does break higher, and certainly it's acting like it really wants to go on and move higher. And as we mentioned on the daily, with the daily close above 94.97 on Friday, it certainly opens the door for this market to challenge the next area. And you know, this market has been bumping its head up against 95.32. We did get up to 37 on Friday, but we couldn't get past this 95.32, which was our resistance. Before the market actually slid back to 95 even. I thought it might make it to 94.96, but it made it 95, and then we started working higher. We've come back. Now we're taking a dip, but look, the dip has only been slight. So really giving the market from a technical standpoint the opportunity to push higher, and push higher is exactly what it's doing right now. So if that's the case, then we can quickly slide here into gold, even further pressure. So we're going to go and keep this 1179. There's some support coming in at 1185 though, but we're going to keep that support at 1179, the downside target. Let's go and move into the 30-year bonds. Yeah, just when it looked like we were starting to recover a little bit, we do want to take another dip back here in the 30-year bonds. So this is a bit of a surprise to see this weaken again, but we'll go on and go with support right there. 39.23, which is actually just a pip lower than it looks like what they went to. So they went to this area. I'll show you right here. So just about a tick lower. So we'll go with 39.23 for our support. Resistance on a short-term basis is going to be 40.15. See that coming in right there, which coincides with this top right there. So it's 40.15 for resistance on the bonds. And the bunds have been all over the place. This would be support here at 58.33. And let's take a look at it on a fib. And 58.32 would be the 61%. But we've already tried to put in a hammer, so a little mini hammer. So if we break here, it seems like we would push even further, but we'll go with 58.32. It's a long ways off. Let's just go with the level right here, which is 58.65, which is still about 10 ticks away, which is about a couple of ticks higher than the day's high. And let's move into the DAX. Nice bit of a recovery here in the DAX. Resistance is going to be right there at 12,340. It's just above that 50% where they stopped. Support. It's going to be just a hair lower, which is going to be not that far away, 12,265 to start out with, 12,265. And that concludes the bias chart. Dale should be here. And thanks for joining us here on the European crossover webinar.
GM, Paulie. Oh, I mean, good morning.
Hey, good morning, Dale. How you doing?
I talk in text talk now. GM. How are you, buddy?
I'm doing good. How you doing?
Good, man. All right, let's have a great week. Thank you, Paulie. So we get to talk a few more days and before you go private. So thanks very much, Paulie, and everybody. Let's have a great week. Who's up to having a good week here?